My top priority is fighting inflation.
Inflation.
Why is this word being chucked around and what's going on? Well, currently, the US inflation rate has hit a 40-year high, and across the pond, the Bank of England forecasted that UK inflation will hit 10% by the end of the year, as interest rates have been lifted up to 1%, the highest level since 2009. But what is inflation? Well, inflation is the general rise in prices across an economy over a certain time period. Generally, countries target a 2% inflation rate. So to see the US sitting at 8.5% and the UK not too far behind at 7%, this has caused alarm bells to start ringing. But again, before we start this video, what is inflation? Well, there are three types of inflation. You have demand pull, cost push, and built-in. Now, demand pull relates to when consumer demand outweighs production. Cost pull relates to when production costs become more expensive. And built-in relates to when workers demand higher wages. And over time, these three different types of inflation eat into a consumer's purchasing power. So how does this link into what we're currently witnessing? Well, what we're seeing is cost push inflation. Due to lingering effects of COVID on the supply chain, and now the invasion of Ukraine by Russia, we're seeing an expensive cost push onto resources such as food, raw materials, energy, petrol, and so on. And if you just look around you, you probably notice the price of everything going up. But the question is, how can we protect ourselves from inflation to stop our cash becoming more worthless? Well, in this video, I'm going to discuss three different investment areas where you can leave your cash to protect against inflation. So let's start off with number one. It has to be real estate. Now, as inflation rises, so do property values. And if you look around you, you've probably seen it yourself all across the market in a different number of countries. Now, of course, buying property is easier said than done because it requires a large down payment. So if you can't afford to invest in real estate, I've got a better alternative for you. You want to start looking into REITs or real estate investment trusts. And this is what I've currently been doing. Now, REITs are companies that own a selection of properties across different industries that produce income. Therefore, as property prices rises, so do the REITs. And on top of this, they also pay dividends, normally 5, 6, 7, 8%, and you can also purchase them through a US Roth IRA or a UK ISA account, therefore protecting you against tax. Now, what REITs do you invest in? Well, there's a whole selection of REITs available that again cover different types of sectors out there. But what you can do is screenshot the following, and this will provide you with a basis to start your research on what REITs you could buy out there. Number two, we move on to value stocks. Now, during inflation, what you'll see is a movement of capital from high-risk stocks to low-risk stocks, and these low-risk stocks are normally called value stocks. Now, value stocks are normally publicly listed companies that are trading relatively cheap compared to their earning potential, and they're often branded unsexy compared to their high-growth counterparts such as the tech industry. But what is a value stock? Well, value stocks tend to have four characteristics: maturity, steady growth, steady revenue, and dividends. These are the four characteristics they normally display, and because of this, often these stocks are found in industries such as healthcare, logistics, telecom, financial services, infrastructure, energy, and that's why they're often called unsexy stocks, because they're not your general household names. And number three, we have commodities. Now, when I say commodities, precious metals, raw materials, natural resources, these are all examples of great hedges against inflation. And we've sort of seen this in our current market environment because these are the items which are causing our inflation right now. Now, there are generally three different ways that you can buy into commodities. Now, number one is you buy the physical product, and this is the least practical option. You go to the store and you buy your gold, you buy your silver, you buy your barrel of oil if you want, but again, not very practical. Number two is you can get market ETFs. So what these ETFs do is they mirror the movement of the commodity that you want to buy in. And this is generally quite a nice option because it means you don't have to buy the physical product, but you're still gaining from the movements. And the third way you can invest in commodities is buying stocks of the companies that mine these commodities. So that wraps up your three different ways. And again, if you're interested in commodities, you can screenshot the following and research. Now, that concludes the end of this video. If you have any alternative investments on how to hedge against inflation, which you think are a better option, let me know in the comments. And if you've enjoyed this video, why don't you hang around, drop a sub, and check out some of my other videos. On this channel, I cover everything related to finance, business, stocks, cryptocurrency. If it makes money, I'm normally interested in it. So thanks for watching this video and catch you next week.